sectors that lag and then they may lead the next year. Any thoughts on banking right now? What's going on? I mean, we mentioned it earlier how I talked to bankers and they say that it's extremely slow right now. They're not lending, credit's contracting. I mean, have we bottomed out? You think in terms of that sector? I mean, rates only. I mean, yes, they could maybe go up a little higher, but they kind of only have one place to go.
Right.
At some point they only have one place to go, which is down. Just any thoughts on banking and what's going on there?
Yeah, I mean, I think if you wanted to be speculative, um, you would probably do a neutral trade, which sounds strange to say speculative and neutral. But if you didn't want to if you were worried about uh, the broader equity markets, the real spread trade, which is out of whack, is tech against financials. Meaning, like if you're going to try to construct a trade around that, the way to do it, taking out the beta, the market movement component, would be long financials and short tech. The ultimate contrarian trade, but do it dollar for dollar. So you're trying to play the convergence, right? Whether tech goes down more or financials catch up, either way you benefit. So I do think there is a logic to that, despite the risks around financials. Because if the financial dynamic gets worse, I don't see how the market itself, and the market again is largely large cap tech, can totally ignore it the next time around, right? It's got to be something that's bigger, right, to really shock people. So, not financial advice, obviously, but does it make
Right.
sense to consider financials, maybe even preferreds, which a lot of the financials tend to be, have preferred shares? Probably. I'm a big fan of Walter Deemer's line, right? When it comes time to buy, you won't want to. I
Yeah.
mean, there's no sector where that is more true now than financials.
Right. Gold and Bitcoin. We didn't really talk about it last time. I know you've had a number of guests on. I've seen you tweet a little bit about it, mostly just tongue in cheek stuff
Yeah.
on both of them. I've been in the Bitcoin space for a while. We do some mining currently with some natural gas that we have, and it's been interesting. I've learned a lot. The economics are struggling with mining right now, but Bitcoin has done really well this year. It obviously did really bad leading up to that, so it's kind of like reverse. But just your thoughts broadly on gold as well as Bitcoin. Do you pay attention to it? Does it matter in your view on how things are going? Do you like either one of them? Just your general thoughts.
So I think the answer is going to depend on BlackRock's success with the Bitcoin ETF, right? And I say that tongue in cheek, but I do think there's a lot of history that shows that the moment you have a product around something that's been hot, that tends to mark the top of the cycle for the thing that's hot, right? And you saw that, by the way, with when Bitcoin futures first came out. I think in 2017, that was the first sign of a top. Then the Bitcoin futures ETF comes out as Bitcoin's at its highs, and then again they were the highs, right? So I think the worst thing in the world for the Bitcoin community is to see products like what BlackRock wants to put out there, purely from the standpoint that the moment you create products that institutions can access, the moment the institutions then want to put it in a box, they want to categorize it and classify it as something. And the moment that happens, you lose the diversification benefits of Bitcoin, because then it co-moves. Just like when you have a stock entering the S&P 500 ETF or S&P 500 index, suddenly the co-movement is tighter, the correlation is tighter just because it's moving with the index. Even though nothing fundamentally has changed with the company, correlation is tightened when you're in an index versus when you're not in an index. So the narrative for the last 2 years or so was what? That Bitcoin is correlated to the NASDAQ, which destroys the diversification benefits from a portfolio perspective of Bitcoin, at least for a moment in time. We can say diversify around counterparty risk. Okay, I'm just talking about pure performance here. Interestingly enough, when all the FTX stuff started taking place, you started to see a divergence the other way around, meaning Bitcoin cryptocurrencies were falling as the NASDAQ was rising into the end of last year. And then obviously Bitcoin has taken off quite a bit. But again, taken off with the NASDAQ, obviously much more so. I think the best thing for bulls would be to not see the kind of adoption everyone is claiming for or clamoring for. That probably actually creates more of a divergence of Bitcoin and makes it a more interesting diversifier. I think if BlackRock does get the Bitcoin ETF through, history would suggest that's not going to be kind to bulls.
That's an interesting take. You don't see that one a lot. I mean, basically everybody's general take is that it is this finite supply and that more access to, more people trying to buy it or more the larger the market cap gets, basically, because you're more people trying to get in, but you're looking at it more as a portfolio tool. And I've heard this argument as well, as why some people that are in the investment space are like, look, if it's a way to diversify and it's something that's non-correlated, there's a big benefit to having that in a portfolio, at least to some allocation. And so it's kind of what you're saying is sort of contrarian to what you're hearing on the Twitter world or in the other world, which is like, if BlackRock's in, this thing's going to take off. I think that the BlackRock stuff to me is interesting because I've talked to guys like Doomberg,
Yep.
who is very cynical on crypto, and rightfully so in most of his takes. And my question to him was like, has all this stuff with the SEC and coming after all these like Coinbase and Binance, is that really because they want to crack down on the crypto industry, or is it because they're trying to clear the way for the incumbent legacy guys?
Yeah, which is I mean, listen, it's a cynical view, but it's one that I don't think is irrational. I mean, a lot of people have said that too, right? I see that on FinTwit. Or I mean, if you really want to think through sort of the real conspiracy to the conspiracy would be that they're doing that to crush it, because I mean, this is not what I believe, but I mean, could you make an argument that BlackRock is doing this knowing that it's not going to pass, just to crush also the narrative? Right, which I'd argue is still actually good for Bitcoin, because again, it means no institutional products. Maybe, right? I mean, so who knows, right? Look, they want to make money off of this. They see it as something that's profitable, because margins everywhere else suck, right? So Wall Street's going to do what Wall Street does, which is basically try to suck as many fees as possible by providing as many products as possible when you can get access to Bitcoin directly. But I just question how it actually ends up playing out in reality. I always go back to, the narratives are often wrong, right? It just takes some time to prove that out.